Hey, what's going on, you guys? John here. So today's my birthday. I'm on Instagram on the Explore page. See that famous Warren Buffett infographic showing how much money is worth at each age. So I see that, and then I start doing research on Warren Buffett because I'm comparing, where he was at this age, what he was investing in, his strategy compared to what I'm doing and what I'm trying to do. So looking at this, and I started realizing he never incorporated multifamily investing in real estate, into his wealth building activities. Then it made me question if I'm missing something, if I could do something bigger and better. So I thought to take the entire day, today's my birthday, smash the like button for my birthday, and basically bring all the information to you guys. See if this information applies, see if you're better off investing in stocks over real estate, see if this information is going to help you build wealth faster. So let's begin and smash the like button for my birthday. Thanks so much.
Coronavirus is front and center. Something else will be front and center 6 months from now, and a year from now, and 2 years from now. The real question is where are these businesses going to be 5 and 10 and 20 years from now? Some of them will do sensationally, some of them will disappear, and overall, I think America will do very well. It has since 1776.
5.5 weeks after that interview, he sold 13 million shares of Delta Airlines for $314 million and roughly 2.3 million shares of Southwest Airlines for $74 million. So roughly $400 million worth of stock just weeks after that interview.
And Warren Buffett brings a lot of great points to the table. First being is that who knows which companies will be around. I mean, selling nearly $500 million worth of stock in an airline right before oil prices plummet. If social distancing becomes a thing, this is going to do tremendous damage to a lot of brick and mortar retailers, a lot of large companies that we thought were anchor companies, blue chip stock companies, could be affected by this. And it's also a really interesting time to trade stocks. To me, a lot of these prices don't make any sense. Nobody's working. Nobody's making any money, and yet stock market looks almost unfazed. It's barely moving. Given the volatility that's happening in the economy, you would think that, at least I would think that stocks would be a much lower, and I think Warren Buffett agrees. That interview was, as I mentioned, pretty recently, and he's been stacking cash, meaning Berkshire Hathaway, over $100 billion in liquid cash as of the last year and a half ago. So just kind of waiting on a big change. And this social distancing change that could affect the economy would do big things to airlines and businesses like that.
If I had a way of buying a couple 100,000 single family homes and had a way of managing, the management is enormous. It was really a problem because they're one by one. They're not like apartment houses. But I would load up on them, and I would take mortgages out at very low rates.
At that same time, private equity giant Blackstone formed Invitation Homes, bought the roughly 82,000 houses during that recession, that downturn, made $7 billion. They built out the management and did everything that Warren Buffett did not want to do in terms of managing all of those homes, all of those properties.
You are a young individual investor at home and you have your choice between buying your first home or investing in stocks. Where would you tell someone is the better bet?
If I thought I was going to live, if I knew where I was going to want to live the next 5 or 10 years, I would buy a home and I'd finance it with a 30-year mortgage.
He's saying real estate over stocks if you're going to live somewhere between 5 and 10 years. So let's do the math. Normal apartment's $1,500 per month, so 1,500 times 12 is $18,000 a year in rent. $18,000 by 7.5 years, let's just call it in the middle, is $138,750 on rent. That is crazy. Then the median house price during that interview is $270,000 in America. So let's just say you had 20% down. On a $270,000 purchase, you put $54,000 down. So you took out a mortgage of $216,000. Your payment with a 4% interest fixed rate mortgage with a 700 credit score is $1,321 is your monthly mortgage commitment. That does not include any repairs or anything else.
Now comes that $1 million question. Is it better to rent or is it better to own? Warren Buffett's saying it's better to own your property if you're going to live there between 5 and 10 years. And I agree, and here's why. So when you buy a property, you have three things that you pay every month. The first is the principal and interest payment. The principal, how that works is if you borrow $300,000, every month you put a little bit towards that $300,000 to pay off the bank. The other percentage is interest, and the interest is what the bank profits from lending you the money. So the principal payment, that's just paying down the debt, so that we don't even consider. The interest payment, however, that's a tax write-off. What that means is that you can write that off at the end of the year, up to $10,000 in your primary residence. So $10,000 divided by 12 months in a year is $833 per month in allowable write-off. For this property, we only need, and we're only going to use $196 per month. So that's a tax write-off. So of the $1,321, we're already writing off nearly $200. So then we ask, how much is the interest? The interest is actually the lion's share of the entire loan. So we can write off the interest, and this leaves our total payment, out-of-pocket payment, because the homeowner's insurance, that's not deductible. So this leaves us with a $91 payment, roughly. And then we just have to maintain the property. So we ask, how is it that renters generally have less net worth than a property owner? Well, because rents increase on average of 3% a year, 3% a year, and property values increase by about 3% a year. So if inflation is crushing the dollar by 2% a year and rents are rising by 3% a year, that's 5% every single year that the renter is pushed back and the homeowner is not. So this is definitely something you want to take into consideration.
That being said, I still wouldn't buy a single family home, but take a look at the numbers in writing, just maybe a bit more clear and easier to understand. And even though I wouldn't buy a single family home and Warren Buffett agrees with me not to buy a single family home when you're just starting out, it's for an obvious reason. And the obvious reason is that when you're just starting out, you want to play defense before you play offense. You don't want to run out and really become house poor to where you're making these payments every single month. Yes, they're tax deductible, but you still have to make the payments. You have to replace a roof. You have to do anything like that. You're coming out of pocket constantly for something that's not going to generate you any consistent monthly income.
And I could buy a couple of them at distressed prices and find renters.
And who wouldn't want to do that? If you actually think about renting, $1,500 per month, just in 7.5 years of rent is $138,000. So he's talking about buying homes with fixed rate mortgages, meaning that the payment will be that $1,321. He'll rent it out for $1,500, so it'll be essentially a break even. However, in 7.5 years, he already got 50% of the total property paid off. In 15 years, the entire property is paid off. In 30 years, it's paid off twice. He wants a couple of them for good reason. His number one rule to investing is not to lose money. That's his number one rule. So he wants to spread out his risk. If he had one house that he was renting out and that house became vacant and it took 2 or 3 months to secure a new tenant, he would have to come out of pocket during that period, and then it would eat into his profits. If he had a roof repair or a plumbing issue, he would then have to come out of pocket again. Or an eviction, he'd have to come out again.
Berkshire Hathaway has been a longtime shareholder of Gillette, now part of Procter & Gamble. Buffett says he sleeps well knowing that when he goes to bed, millions of men grow whiskers overnight. When they wake up, many shave with Gillette. This means Gillette has multiple sources of revenue. Every person who shaves with Gillette adds to the company's sales. In contrast, if Buffett owned a company with just one customer, his risk would be higher and he wouldn't sleep as well.
However, if he were to instead buy one fourplex, which is still considered residential, so you could use the same down payment on a fourplex as you would use on a single family home, he would then spread out his risk. So if he had a vacancy or even 2 vacancies out of 4 units, he would still pay the mortgage. And that's ultimately what he is looking to do. That's what he's looking to do. He's looking to profit consistently. And with all that said, factor this into your equation. If your goal is to build wealth, the goal shouldn't then be to rent, because he wouldn't rent because he's losing money. He'd be losing the 5% a year. 3% on rent increase, 2% with inflation, and he wants to build wealth. So that being said, he would buy a fourplex, most likely, live in one of those units, rent out the other units, save money because now he's not paying rent, and use that money to invest either further into stocks or into more real estate. But he's playing the long game. He's not looking to get rich quick. And I think that this information is very helpful for people that are just starting out. And as we step into a new market, into a recession, I think that if you buy just one good deal, one triplex, one fourplex, it'll change your life and your family's life forever. If you're looking for mentorship and training in multifamily property and buying properties like this, click the link in my bio or drop it in the comments. And if you found this helpful, if you have any questions about real estate investing, drop them in the comments. Thanks so much, and please smash the like button and subscribe. Share it with a friend if you thought it was helpful.